Hello traders, welcome to Investoo.com's Crude Oil Trading 101. In this lesson we are going to look at crude oil on the long-term basis. We are going to look at it as a swing trade opportunity, and the reason we are going to do that is because crude oil is such a great earner. The only thing you have to do is make sure to be trading the right side of the market. Remember that when you're trading crude oil and you're using one lot to trade it, one tick equals to $10, and one tick is 1 cent moving price in crude oil. This means that $1 move in your favor can yield $1,000 if you're trading with one lot. And I know that some of you don't have the balance or the equity to trade one lot and swing trade crude oil. That's why you can do it using CFDs and using micro lots or mini lots. But in any case, crude is a great earner because it trends so good. Just look at these moves, okay? We are talking about a move of from the break of this kind of a range to the lows. We're talking about $33, okay? And $33 is actually 3,300 ticks, and if you're trading one lot, that position would have yield $33,000. Okay. Now I know that holding a that holding a position for 3,300 ticks is a lot, but we're talking just about how much that short move yield. Okay, and if you look at that move up, it has yield about $22, which means that one lot position on it has yield $22,000. But you gotta be careful when you're trading crude oil because it's hugely volatile. And when it trends, it trends. That's why we are always looking to trade with a trend. Now, we are looking at the 1 hour chart, the daily chart, and we realize that we are in a very steep up move. Okay, this is the structure that we are looking on the daily. And basically, we are forming some kind of a wedge on the daily. Which can mean that this can actually be a continuation pattern of the downside, or this can actually mean that we are in a mean reversal. It really doesn't matter what we think. We have to analyze it. Okay. Now, if we go back to the 4 hour chart and we go to today's price action, you can see that we are actually around that daily resistance that I marked. Okay. Now, if we are going to be trading the 4 hour chart, I'm just going to hold. You need to understand that the 50/40 is a reference on the daily time frame. What we are looking here is this area, all right, this previous low, because we are making higher highs and higher lows. So what we are trying to do here is we are trying to buy a dip. Okay, this was a huge move to the downside from the 52 level, 52.70 level to the 49.66 level, which means that we almost did $3 with a very strong gap that was already closed. But not only that, but we are also at the 676.4. Just let me change the color of my Fibonacci retracement levels so we can have a better look at where we are standing. All right, so we are also at the 76.4. So when you are trading, you always want to trade structure. When you are swing trading, always want to trade structure, and this is the structure that matters. We made a high here and we made a low here, and this is the zone that we are going to be trading. This is the long position that we are going to be taking. The reason is that we are in a we are in a bull market and we want to be buying dips. Even though this dip or this this move to the downside is very strong, we are still inside a very bullish market. So we do want to be standing or we want to be buying where big money is going to be buying. Now let's add the volume indicator. And as you can see, we do have a buy imbalance. The market already closed, but we do have a buy imbalance on crude oil, and we've had some buy. We've had some buy surges right around here. And if we use the market profile on the daily, you can see that we are actually trading inside of a very strong point of control around the 50.02 level. So not only you are need to be looking at the structure of the market, you also need to be looking at where the volume or where the big volume has been traded. If we zoom in a little bit, you can see that this zone right here is a very strong area in confluence with the the 76.4 Fibonacci and an area of previous resistance tested as support periodically. So we are going to be long right now, and we are going to be putting our stops all the way down here. Why we are going to use such wide stops? Well, the reason we are going to use such wide stops is because we need for our trade idea to be invalidated. And if we break with this low, it would mean that we would need that the up structure would break, and this could actually be a simple continuation on the daily of the down move. So basically, we have two things going on. We have a possible long position from a bounce of these levels, but if we move below this level right here, we might want to shift and go short. This means that not only are we going to be trading a long position from here, but you should also put your stops at this level and a sell stop at this level, because your trade idea was invalidated. And if this up wedge breaks, it could mean a continuation of this down move, and this could mean at least a $10 move to the downside. So you need, when you're swing trading, you need to be prepared for both scenarios, okay? You need to prepare for your actual position, but you also have to look on the larger side of the market and look for a possible shift on your trade idea. Remember that if your trade idea gets invalidated, sometimes it means that the short side is in play. And this doesn't mean revenge trading. This doesn't mean that you are chasing the market. This means that you are prepared for both scenarios. This means that if you don't make money on the long side, you are going to make money on the short side. And swing trading is all about that, because when this opportunity goes away, you are no longer going to have such a great risk to reward scenario for a short if the short happens. Because remember, no one knows what's going to happen. Not even you, not even us at Investoo.com. We are risk managers. And if the first trade idea doesn't accomplish, maybe, just maybe, if everything sums up for the short opportunity, you will make money on that.